paying the employees and all.
Okay, so after meeting all the expenses of the business, the owners they get to keep all the profits of the business. Fine. So
And
that
then
is sole trader. Any downside of sole trader?
yeah, they have to they're completely liable to everything, and then also the stress for them because they have to single-handedly manage the whole business.
Hmm. There is unlimited liability, which means if business is unable to pay any liability, the
And the
personal
owner has to
assets
pay, have to pay off the pockets.
out of the personal assets. Okay, and then there is this issue that fine, you're working all alone, but there wouldn't be any input in decision making from others. So you could have benefited. I mean, the owner could have benefited from the input of others, but one might say that the employees could be there to give input, but the person who is owner of the business, so somebody who has the risk, the way they give input into the business as opposed to somebody who is not and who is not taking the risk. So for the employee, whatever input he gives, it's not his risk which is involved over here, right? It's all risk of the owner. So it's different from having a partner in the business giving you advice as compared to an employee giving you advice for the business. Okay. Also, for the benefits of sole traders, we discussed that they'd have the benefit of single taxation. Since it's the single owner of the business, there is no separate legal entity from the owner of the business. They would be taxed just once. Okay. So from sole trader, we move to the concept of partnership. What's partnership? What are the advantages and
Partnership is
disadvantages?
2 to 20 people owning a business together.
Hmm.
This is an advantage for the owners because they are because they're not like not one owner is completely liable to everything. It's like divided by 20 people.
Hmm.
And then the disadvantage is like you don't get the full share of profit. It gets divided and it becomes little less.
Hmm.
And then one more advantage is lesser workload for you because others will also have to put their input rather than just you putting all of the input.
Hmm. Okay, so what are the downsides of a partnership?
Not enough profit shared, and then
So first of all, profit is shared. That's a downside.
mm,
I mean, there is a counter advantage to it as well. If the partnership it makes a loss, the loss also it gets shared among everyone. But for now, we are talking about disadvantages. So profit is shared. What else? There is unlimited liability, the
yeah,
same
no,
as
limited liability, right?
so there is unlimited liability for partnerships. Usually, the default case is that the partnerships would have unlimited liability. Some territories, some countries, they allow for limited liability partnerships, but there are few. It's not available everywhere. The default case of the partnership is that the owners they'd have unlimited liability. Okay,
Hmm.
and on top of that, there is an added disadvantage of. mm, there is a disadvantage of what's that called uh, yeah, every partner is bound by the decision of every other partner. For example, if you and I are in a partnership and I go make a deal and then you later on make the claim that I was not involved and I don't want to be part of this deal, no sir, we are in a partnership. So we are in a partnership, and every decision that I make would equally bound you as well to that decision. Okay. So downside is every partner bound by decision of every other partner. Okay.
And then lesser input needed.
Lesser input needed. What does that
Like
mean?
as in you don't have to wait. Like this is the only disadvantages, right? And then after that, I'm moving to
Hmm.
advantages.
Advantages we discussed before. Acha, now we move to company. So first of all, what is a company? How is a company different from a sole trader, sole proprietorship or partnership?
Companies can differ because they may have like
How do you
multiple people.
how do you
Okay.
form a company to begin with?
Uh, legal work first. Then somebody
What
has
legal
to
work?
own the.
What legal work?
The government has to
Okay, I repeat my question.
recognize.
I repeat my question. You want to form a company. What do you do?
Uh,
So there is uh, an institute with different names in every country. There, it's called Securities and Exchange Commission. Securities and Exchange Commission, something of the sort. Okay, what does the Securities and Exchange Commission, for example, in USA this is SEC, in Pakistan this is SECP, Securities Exchange Commission of Pakistan. There would be one for India, there would be one for UAE, and every country. What it does is it regulates all the businesses, especially companies. And if you want to form a company, what you'll have to do is you'll have to submit two documents to this. What are those two documents? The two documents are articles of association and memorandum of association. Okay,
that
sir?
rings a name. Yeah.
Articles of association and memorandum of association. And what do you state? What do these documents contain? Memorandum of association, it contains five things. First of all, it contains name of the company. Okay,
Yeah.
it states whether the liability is limited or unlimited. We can form unlimited liability companies as well, but that is very, very, very rare. Usually we have limited liability companies. It has the location, where would the company operate out of, what locations would it carry out its business in. There is a clause of how much would be the share capital of the of the company. Okay, and there would be an objective clause. What is the objective that this company is trying to achieve? So these
Mm,
are the five things that are contained in memorandum of association. Again, name, liability, location, share capital, and objective. This is what you, I mean, there is a format. You fill that format, and in that format, you are stating this information. Article, so memorandum of association, it deals with the information that company would have to give to the outside world. Okay.
yeah.
For articles of association, this is internal information of the company. For example, who would be directors of the business? How often would the directors of the business meet? What is the quorum for the meeting of the directors? So the internal procedures for the company, the way it would carry out its business, that's included in articles of association. So if you
Okay.
submit these two documents with the registrar of Securities and Exchange Commission, they would register you as a company. So again, what is a company? A company is a business entity which is registered as a company with the Securities and Exchange Commission.
Okay.
A company is a business entity which has obtained registration to that effect with the Securities and Exchange Commission. And in order to get that registration, you have to submit these two documents, articles of association and memorandum of association. And this is the information that's filled in it. Now, coming to the upsides and downsides of forming a company, what would be the benefit?
Limited liability.
Excellent. So the first thing that we are looking for when forming a company is limited liability, which would mean that if the company is unable to pay off its liabilities in the course of business, the assets of the owners wouldn't be at risk. Okay, what else?
Multiple people.
Multiple people. Okay, so there is one advantage in case of company which we didn't write as disadvantage in case of sole proprietor or partnership is that the funding would be limited. In sole trader, the funding of the business, it would be limited to what a single person can single-handedly fund the business. Okay. Similarly, in case of partnership, the resources that you can pull in as funding or the equity of the business, it could come from any of the partners just. But in case of companies, since there is no limit, okay, in case of private, within companies also, we have a distinguishing, like there are two possibilities. There is a private limited company and there is a public limited company. So private limited company is where you would be restricted to a certain number of members that you can have. Usually that is 50. You cannot have more than 50 members in a private limited company. Also, the trading of the shares, if you are a member of a private limited company and you want to sell your shares in the open market, you would be restricted from that. Okay, they
Only
cannot,
owners could do that.
owners cannot freely trade. Owners are the ones who have shares to begin with. If you're not an owner, you wouldn't even have shares to trade in the market. But
Hmm.
even owners of a private limited company, they are restricted from doing free trade of their shares in the market. There are limitations on that. Similarly, if you want to issue new shares and you want to bring in more people into your company, there are limitations on that as well. Okay.
Okay.
Okay. So the advantage that I was talking about that we have in case of company as opposed to sole proprietorship and partnership is that you, since you have more members of over here, there would be more people who can pool in their resources. Hence, it has access to larger pool of capital. Financing for a company is relatively easy as compared to raising finances when you are a sole trader or a partnership.
Hmm.
In case of private limited company, you can have up to 50 members who can provide the financing. In case of public limited company, there is unlimited, the whole public. Anybody you bring in as a shareholder, they can provide finance for the business. Understood? Okay. So the advantage. Okay. Any further advantages that you can think of?
Mm, it's safe because it's like security and exchange. No.
Usually people they have more trust when dealing with a company. Why? Because there are more let's say restrictions on the company. So the Securities and Exchange Commission, it would be keeping a close eye on how the affairs of the company are being conducted, and and they'd be asking them to report in more details as compared to sole trader and as compared to partnership. So since the business is already subjected to more scrutiny, I would have more trust in engaging and carrying out business with such an entity. So for example, I know that a company, it is for sure there would be a requirement on them to provide their financial statements to the registrar of the company every, I mean, often half a year or twice a year and so on. But there wouldn't be any such requirement on a sole trader. So I would know that this company, it's already being subjected to scrutiny of registrar. So I'd have more trust in carrying out business with them as compared to carrying out the same business with a sole trader.
Hmm.
Okay, we would pause this discussion over here for a bit. And if you could, do you have your book with you right now?
Yeah.
If you could come to page number 21 of your book, there is advantages and disadvantages of a sole trader. And on page 22, there is advantages and disadvantages of partnerships. If you could quickly read that. So in case of companies, yes, there would be this disadvantage that the companies, they have to abide by
Do a lot of legal
more legal
formalities.
formalities as compared to the other two forms of business. Correct. Acha, a quick discussion on franchise before you read that from the book. What is franchise, first of all?
Franchise is like when somebody opens another branch of a business, but it's under the name of the business. Like the franchise, the person who provides a franchise, the franchisor has
Hmm.
still has the name under him.
So, for example, you have a business, let's say you're selling shawarmas, and you open another outlet of shawarmas. Would that be franchise?
No.
Why not? You just said opening another branch of the business having the same name. You'd give the same name to the other branch as well. So how
Oh,
is a
it's the same name. Okay, fine. I thought they were just selling shawarma.
so the branch, how it differs from franchise is that as long as the owner is themselves operating different branches, it doesn't become a franchise. When you allow a non-owner, a person who doesn't own the business, yet you allow them to open and run the business in using your name, and obviously you'd put some restrictions on them as well. That would be the case of franchise. When the non-owner, they use the name of the business after permission from the owner, and they carry out the same business, that is when you have franchise. Understood, sir?
But it's still under the name of the owner, right?
It's under the name of the owner. The owner maintains the ownership, but he allows a non-owner to run and
Open a
operate it.
branch under, yeah.
So, for example, the famous food chains that we have got, Burger King and McDonald's and whatnot, the owners themselves, they're not coming to UAE and opening branches and overseeing the operations. They just carry out an agreement with the local branch over there, and they tell them that fine, you can use the name of the McDonald's and sell our burgers, and we'll give you recipes and stuff. But you would have to comply with these restrictions if you are to do this. And we know that there are two parties to franchise. There is a franchisor and there is a franchisee.
Franchisee.
Franchisor
Yeah.
is the person who allows the other businesses to use his or her name. The
Franchisee is the one that uses the
uses
business.
uses Okay, so what would be the advantage and disadvantage to franchisor, and what would be
Uh,
the advantage and disadvantage to
the
franchisee?
advantage is that you get resources and training and advice before after buying the after opening a business.
This would be in case of
Like you,
franchisee or
oh
franchisor.
for the franchisee, yeah, you this is for the franchisee. You
So you
get
get,
advice, training, and resources that'll help you.
okay, training, advice, resources. Okay, what else?
And then like it's big the franchisee can choose, like, because they can see which company is thriving right now. For example, which fast food joint is like doing the best.
Hmm.
That's the franchise that they're most likely to open.
So you'll have to do less marketing efforts yourself. The name of the business would automatically pull in customers, right?
Yes, and
Okay,
then
what else?
it's something about costs.
Cost, would they be more or less in case of franchise?
Lesser.
Lesser. Acha, the disadvantage would be that
Lesser because everything
you'll have to
is already
pay
set for you.
a royalty fee. Okay, so that would be included in the costs that you have to pay the royalty fee. And other than that,
And also you don't get a full share of profit for you because it's
uh,
still under the name of the franchisor.
so the for what happens for the profit is, and expanding on this concept of royalty, you'll have to pay this royalty fee even if you're not making profits.
Yeah,
So
but I'm just saying, like, profit is generally shared, right?
I'm saying it's more grave than that. It's not that you just profit is shared, you have to pay even when there is no profit. So one thing is that I share my profit. Another thing is, even when I'm making the loss, I have to make the payments. You get it?
Mm, okay.
So you pay a certain percentage of your revenue as your franchise fee. Usually that is the case. A certain percentage of revenue is paid as franchise fee. And yes, so that's the downside. The other downside is you don't have full liberty in business. How? The franchisor would make sure that you buy from certain suppliers, only them, and you make the good the way they tell you to make the good and not in any other way. Similarly, even to the extent that the decor of the setup of the place, they dictate to that extent as well. You must have noticed that the furniture, the color theme, the type of furniture, the material, the seating arrangement, it's almost identical in all the restaurants of the same
Yeah.
fast food chain. So that isn't by chance, that is by design. Their franchisor, it mandates that they follow this pattern. Similarly, what
Hmm.
items you would sell and what items you wouldn't sell, that's also controlled. Okay. But so this is with regards to the franchisor. What about, sorry, this was with regards to the franchisee. What about the franchisor? Do they get any benefit out of this franchise deal? What's in it for a franchisor? Why would they seek to enter into franchise agreements?
Because they get a profit and loyalty fee.
So first of all, yes, you get a royalty, ROYALTY, royalty fees. The other thing is it helps you expand your business far quickly as compared to if you were doing it all by yourselves. So you are not making the investment in opening the new shop, the franchisor is. The franchisee is going to make the investment. The restaurant and the setup cost and everything, that would be investment of franchisee. Even if you don't have the investment, still you could sell your stuff and expand your business. Okay. So that's the main thing that franchisor is looking for. What's the disadvantage to the franchisor? The main disadvantage.
He would have to. They would have to spend at the start for providing first things.
Mhm. It would be if it goes wrong in one place. If anything wrong happens in one place, your brand it gets to suffer everywhere.
Hmm.
So, for example, an incident happens at a McDonald's franchise anywhere in the world. It has happened at McDonald's. Okay, it's the name of McDonald's that comes into the hire. Nobody knows who the franchisee is. For all the times that you have gone to Burger King or any other fast food chain, these international chains, you wouldn't even know who's actually operating them out of UAE, right? It's the name of the brand. So if they serve good food, it's the name of the brand that gets the advantage of that. If they serve bad food, it's the international brand that suffers. And anywhere you go, you tell them that McDonald's, I went over there and I didn't get good food. Understood? No? Not
Little
con-
bit. No, I don't actually.
no. So, for example, you go to McDonald's Abu Dhabi and the food over there isn't good. Or let's say while you were there, let's say their bathrooms they flooded. Okay, you wouldn't say
Huh?
that their bathrooms flooded. There was some malfunctioning in the sewage or something.
Okay.
Okay, now you
Okay.
wouldn't say that it's the local operator of McDonald's which didn't maintain the property well or whom I had a bad experience with. You would say I had a bad experience with McDonald's. And when it comes in the news that this incident, it happened in Abu Dhabi restaurant, they would say it happened in a McDonald's restaurant. I'm just mentioning McDonald's by way of example. It could be any business. Okay,
Hmm.
you now get it. So, for example, there was
No.
this incident. There was this incident. Every now and then, it happens that there is some, let's say, questions about the type of meat that they are selling in their burgers, the McDonald's. So the
Yeah.
incident, it happens in one country, but their sales is affected across the globe.
Yeah, that's true. Okay, fine. Yeah, now I get it. Yeah.
Okay, so the McDonald's main company, the franchisor, they didn't do anything wrong, yet their brand suffers, and it suffers across the globe because an incident, it happened in one particular location or one particular territory. Okay. Now, if you could please go to your book, the very next page, it has the detail of the advantages and disadvantages to the franchisor and franchisee of the franchise agreement. If you could read through that, please.
Limited companies are multinationals.
Limited liability companies could be multinationals, yes, but they could be restricted to one territory. Multinational is any business which has its presence, its offices, or its manufacturing in multiple countries. Usually, it happens with limited liability companies, but it's not mandatory. Also, one more thing. So, we must remember public limited company is not equal to public sector company.
Yes.
Public sector is what is owned by the government or by the people, because government is nothing but acting on behalf of people. So public sector is whatever is in the ownership of government. Ownership of government. Public limited company, on the other hand, it is where you have limited liability and unlimited number of members. So that is public limited company. So it is a company plus it has limited liability plus there is no restriction on number of members or number of shareholders. Understood? So public limited company is different from public sector entity. One thing. The other thing is that, as you asked over here, a multinational and local and international. So if there is, these are three sort of companies with regards to their presence: local, international, and multinational. So what's the difference?
Sir, give
Local.
me a second, sir. My dad calling me.
Okay, okay. So I was saying that local is what's restricted to one territory. They'd be making their products and selling in just one territory. The international would be carrying out transactions internationally. Okay, so they'd be selling in more than one country, or they'd be buying from more than one countries. Usually, with respect to sales, we declare it. Okay.
Hmm.
Okay, and multinational would be the business which is not only carrying out international transactions, plus
But also
it's also
national
has,
transaction.
no, national would be for the national plus international, it would be there in international business. Multinational, in addition to carrying out the transactions internationally, it would have physical presence in more than one countries. So they could have their manufacturing facility or their offices in more than one countries. That is what multinational is. It operates out of multiple countries.
But
Understood?
globalization is now like when there's physical, but then they just like
Globalization is something different. I mean, it's
yeah, yeah, okay.
related, but it's different in the way. Globalization is how much internationally you are engaging with other businesses or other countries or not. The more you engage with other businesses and other countries, the more globalized economy or the more globalized your business is. The less you engage, the less globalization you are engaging in. Whereas for multinational and international, this is a status that we grant to multiple companies. Okay, so international is when, as long as you are carrying out any transactions with countries outside your own country, you are an international business. International, among multiple nations. Okay, and multinational would be if you have your physical business presence in multiple countries. So you have your offices in multiple countries. Schools, if I give you examples, so for example, a tuition center which is just providing tuition to students outside their country, that would be an international business. But a school which has its branches in multiple countries, they could be considered a multinational. Usually they use the term international school, but you get the idea.
Okay.
Understood?
Bye guys.
Acha ji. Is this enough for today? One last thing, and then we wrap up. The last thing I'd ask you to do is just go through the charts, the definitions and charts of chapter
Okay.
4. So in the margins, keep reading the definitions. and private limited company stock market, and here you have advantages and disadvantages of private limited companies. And then next page you have more definitions and advantages and disadvantages of public limited companies. And that would be it for today then.
Okay, sir. Thank you.
But you would read right now
Yes,
before.
and I think I'll even
Yeah.
finish the paper.